for joining us this afternoon, as usual. If you, as a viewer, have any questions for us here, you can feel free to email us at yourmoney@skynews.com.au, and we'll try to answer any questions that you may have for us. Julia, when we look at the likelihood of a Reserve Bank interest rate cut, how has the market's view on the likelihood of that happening in May changed?
Well, today is all about interest rates, and that's because we saw the inflation numbers come through. Now, we saw CPI rising by 0.4%, so that takes the yearly number up to 2.5%. And of course, that was less than what the market anticipated. So it does look like a rate cut in May is more likely, and that's certainly being priced in by the market. We saw that in the big run-up that we saw in terms of the banks. If we have a look at the big four banks, all of them, ANZ, Commonwealth Bank, Westpac, as well as NAB, saw a 52-week high today. In fact, both Commonwealth Bank as well as Westpac both hit all-time record highs. So it does look like that yield play is still very much in play, and it does look like that's on the probability of more rate cuts to come. Of course, on one hand, inflation is important because we know that the Reserve Bank will have the capacity to move if inflation is sort of midpoint or the lower end of its 2 to 3% target. And on the other hand, inflation is also important because it can be a signal on how the strength in the economy or whether we are seeing some falling demand. And of course, the weaker inflation comes, it can also be a signal that we are seeing a fall in demand as well. So a great day for the banks. The market's really pricing in an increased chance of a rate cut in May. And it's interesting to note that Commonwealth Bank is now the biggest stock on the Australian market. It used to be BHP, and BHP really held that mantle for the best part of 10 years. In fact, since August 2003 to 19th of March this year, but now Commonwealth Bank has that #1 spot, and it really just shows how strongly those banks have been gaining over the last year.
Yeah, Francesco, I mean, is this a changing of the guard? I read, about technicals earlier in the day, and we were eyeing a close above 50.23. We've clearly done so. So what are the technicals looking like right now? What are we looking toward?
Well, things are looking very good in terms of technical sense for the Aussie share market. Yesterday we were eyeing the 50-day moving average, which we broke on the close. That was at 5,013 points, and now it looks like the market is set to test the all-time high that we saw this year at 5,163 points. So things are looking pretty good for the moment. Today we saw a rise of 1.7%, a massive amount of volume going through the market, just under $7 billion. But of course, a lot of that was related to options expiry yesterday. Just to give you an example, if we look at CBA and look at the amount of options which were exercised, it represents 6.6 million shares in CBA. So we saw a lot of activity which was related today to that. But having said that, technically things are looking good, and it looks like we saw buying all over the market. It was a pretty incredible session. Every single sector was trading higher, so we saw green across the board. We have a look at the top 20 blue chips. Every single one traded higher today. We didn't see one of those making losses. And even if we have a look at the top 50, we only saw 4 stocks actually making losses, and they were stocks like Fortescue, Iluka. We also saw News Corp just dropping back a little bit, but a lot of stocks also making 52-week highs today. Suncorp Metway was an impressive one. We also saw SEEK, News Corporation. So all in all, a great day for investors, and it looks like the market now set to test the high of 2013.
Okay, let's get to some company-specific news, Julia. We had a pretty impressive update coming from Air New Zealand, talking about annual earnings expecting to double. What's really behind that? Because that's no mean feat for an airline.
I mean, Air New Zealand has been doing fantastically well. Over the last year, we've seen its share price up by 70%, and that compares to the likes of Qantas, which is up by 10%, and Virgin, which is up by 16%. And if we have a look at Air New Zealand, I think part of the reason its domestic business is doing so well is that exit that we are seeing from New Zealand by Virgin Blue. So that's helping the numbers. If we have a look at Air New Zealand, it is the national premier carrier in New Zealand. That's on both a domestic as well as an international basis. Now, we did see passengers rising by 5.2% in the month of March, but we also saw revenue on a passenger kilometre basis also rising by 2.8%. And while other airlines are increasing capacity, we actually saw capacity dropping, and yet still passengers and revenue per passenger were on the increase. So all really good signs coming through from Air New Zealand. I guess one number which kind of stood out was the drop in demand that we saw coming through for Asia, Japan and the UK, and that was a drop of 15.4%. But that's really just related to China. So the China to Shanghai route, which means the Hong Kong to London route, was cancelled. But all in all, another strong set of numbers coming through from Air New Zealand, and a great performance today. The stock up 5.5%.